insight as to what's been taking place with the Jamaican stock market, now ranked as one of the worst performing stock markets in the world. Yeah, you heard me. Joining us is a business writer and financial analyst, David Rose. Morning, David.
Morning, Gareth. Morning, Delia.
Yeah. Hey. How are you?
Well, it's been a busy morning, busy week, busy year.
Well, I'm sure you're probably up watching the markets around the world. Oops, my phone fell. But yeah, so a quick one for you. A few years ago, probably about 5 years ago or so, Jamaica had one of the best performing stock markets. Things were looking on the up at that time. 5 years later, we are at the bottom end or the other end of that spectrum. What's causing that massive move from booming to, well, starting
booming to
bombing? Yeah.
Well, for context, we have to remember in 2015 and 2018 we had the best performing stock index in the world. So let's say the market was the best, so the index.
Okay.
The index, measures the basket of stocks, and that we had the best performing index in the world in those years. Mm-hmm. And then, in 2023 now, we have one of the worst performing indices in the world. We're just, like second worst, just, behind the collapse in Colombia, which is down 15% year to date. While the best performing is the Uzbekistan Composite Index, which is up 66% year to date. And I have to remember that the markets don't exist in isolation. So what's going on in the background? So over the last year, we've seen high inflation. It's come down, but people are still feeling the impact on their pockets.
It's about high inflation here in Jamaica.
In Jamaica and globally.
Globally, right.
No, because while reported headline inflation might be lower, persons are still seeing, for example, back to school now, prices up. We take your kid to a private school, those prices are up as well. And interest rates have also gone up. Why is it a problem? So for example, you have persons who would have taken out a car loan probably in 2017, 2018, things were good. And they got into rate hikes and they're probably paying $10,000, $15,000 extra per month. Mm-hmm. And that's on a car loan, for example. Mm-hmm. And you have other persons who have, let us say, a mortgage. Mortgages are 30-year instruments, usually they expect these rates to stay stable. Some persons are paying extra 17, 30 grand per month now. Like, that is insane.
Yeah.
People are not getting paid a lot more in that context.
Yeah.
So you have a lot more disposable income being reduced. And in turn, what has happened is that persons are now seeking cash from other alternatives, to make up these little deficits.
The shortfall that they have.
Yes.
It's not the first time, though, for this year that we've had that kind of slump. But then we kind of rallied back.
Well, the thing is, back in May, May going June, like we're in the worst five, and it's getting a little bit worse now.
Up.
No, we got worse.
We got worse?
Yes.
No, Jesus, because I'm thinking to myself, all right, we might be in a little slump now, but maybe we're going to come back up again, but...
All right, so what is there anything else that's pushing it? Or monetary policy or the patterns of our investors?
So I mentioned it a while ago, the BOJ would have increased their policy rates, which would have two things, it would have signaled to banks and other lenders or even financial institutions to raise their own rates. And on the flip side, you also have impacted investor confidence. People need to remember that SSL just happened in January.
Right.
And you have persons up to today who cannot access their accounts. Talking about their stock portfolios and everything.
Right.
Although the SSL, made up a small portion of the market, persons are still scared,
Scared.
No, but think about it, Delia.
Yeah.
You have persons, like pensioners, persons who are supposed to be retired and in peace. Up to today, they're not getting any interest income. They probably get even the income, but they can't sell the stocks, can't get access to the bonds, and some of them are just depressed right now. I have other events happening in recent times, and persons are like...
So investor confidence is not as high.
It's been hit, and you can't ignore that.
And even before SSL, we were talking about other financial institutions where you're discovering fraud, right? Now, a credit to those institutions and to other government organizations that we're better able to identify instances of fraud, so it doesn't go unnoticed. But one of the things I want to ask you, though, David, is from the BOJ side, in terms of the monetary policy, raising interest rates, was that in response to the high inflation to try and temper it?
The BOJ moved pretty early, and everybody should give credit to the BOJ for what they did, because if the BOJ acted a little bit later than when they did, we might have been having a much different conversation now. Because you've kind of realized over the last 2 years, the rate has been kind of stable between a 150 to 157 band.
Right.
You haven't seen it go to like 160 to 170.
Right.
And them raising rates, and in turn, we're seeing there's inflation in the economy has impacted the markets.
And they've had a strategy to try and manage inflation, to keep it within a particular range.
Well, 46% is their target range.
Right.
But in the US, the Fed target is 2%.
Right.
And while they've seen headline inflation come down to 3%, that official rate, the core inflation, which excludes food and energy, is at 4.77%, which is still very high.
Right.
And Jerome Powell is like, we're going to take the hammer and we're going to just hit things, because for them, high inflation is a problem, especially for poorer persons, because they're more disproportionately affected by higher prices.
But let's bring it back.
I want to bring it back to the layman.
Us.
Because, right. So I'm watching. Garth has a certain level of financial awareness. You, David, you have all heap. For me, the investor that just knows I want to put in some money and I want to see turnover and not necessarily turnover. What should I be looking for at this time? Tell me.
So, looking to reassess and analyze what's going on. And when I say reassess is because, for example, we've seen whereby companies have been reducing their dividend payments. What is a dividend? Company makes a profit, they declare a dividend to the shareholders. Just for you owning the stock, you get paid for it. So you've seen financial companies reduce their dividend payments.
Okay.
So, it will say you earned a 5% yield on your $50 million portfolio. That's about $2.2 million around that range. With the dividend payments coming down, you're earning a lot less.
Yeah.
And that might be impacting your ability to survive and live. So what some persons have been doing is they've been taking their money, like from the stock market, for example, and putting it into fixed income. What is fixed income? Your bonds, money market instruments, repurchase agreements. So you're getting probably 12% or around that range annualized, which is probably around $6 million. So this is to kind of show you that persons are looking to find, I shouldn't say safer, because nothing is really safe, but relatively less risky investments to, stay off his environment and preserve capital.
But if we see a continued trend of moving to those types of high yield, less risky types of investments, are we going to still have this problem? How do we get out of it is what I'm asking. How does the stock market rebound and become more buoyant?
The reality is rates have to come down. It's hard to survive in this kind of environment of high rates because, as I pointed out earlier, remember, you're facing higher costs in your electricity bill, you're facing higher costs in your insurance, your loans.
Right.
You have this discretionary income, and on top of that, why would I take on equities when there's a less risky route, in all honesty? So, some persons, as I said, reassess. So some persons have rebalanced their portfolios. Look to reduce financial exposure, look to say manufacturing stocks, or, look to preference shares or other means that carry less risk, but, look at growing capital otherwise. Because the reality is your money cannot be scared, running away.
Yeah.
It has to work somewhere, somehow for you to earn more money. That's the short and simple of it.
Yeah, I mean, it's very interesting because when the rates come down, then you're staring again at that same down the barrel of inflation.
No, that's not necessarily the case because...
But it's a fine balance, though.
It's a fine balance. But remember, back in 2019, when rates went to historic lows, we had the market just going, and we had a significant year. The index of 500,000 points wasn't the best performing in the world overall, but was not the best in that year.
Yeah.
And persons made considerable amounts of money then because persons, said they took somebody on Twitter said they took out a $2 million unsecured loan in 2019, turned it to $80 million by 2021, and they used that as a deposit to purchase their home.
Yeah.
And, persons that are still making money on the market, there are less trades, but people are still making money. But the reality is we're in a different environment, so you have to adjust to it.
According to the environment. Hey, thanks a lot, David. We could talk all morning, but really, we can't. That was David Rose, business writer and financial analyst. We're going to take a quick break on Smile. When we come back, we got lots more for you.